Alright guys, welcome back to part 2 of the support and resistance training. These first two videos, part 1 and part 2, are just to define things for the newest trader, anybody who's kind of at the basic level. I just want to have more of a definition to what it is and briefly explain support and resistance. The next few videos are going to get way more into the charts and how to start applying the method overall. We're going to do a little bit of a continuation. By now you should kind of have an understanding of what support and resistance is, kind of what it looks like, and the idea behind it. Remember, resistance being the ceiling. Resistance is levels where sellers come into the market at the same price. They sell at the same price because resistance is noted as something that's high. Anywhere that someone's selling multiple times, they're selling there because it's a high price point. Anywhere someone's buying multiple times at the same level, they're buying there because that's more considerably on the lower side to price. And just as you kind of refine from the market, you want to buy low and you want to sell high, right? Especially if you're a big investor. So let's do a little bit of a continuation just to put things into perspective overall. Now, one thing we use support and resistance of, and we're going to get kind of into it, is for anticipation. So trading can involve a lot of anticipation or waiting for opportunities. And this is one example that I want to kind of explain and show you guys that I took a screenshot of a few weeks before it happened. So this is a before shot that we're looking at. So here's a screenshot I took in about 4 weeks prior to when this happened. But as you can see here, there's an area now starting since over here that I kind of marked on the chart on this pair. Back around April, July here, you can see between April and July, there's a price point that the market spiked up to and fell. And then look at the time difference though. We came back to that same level way over time. You have 2015, 2016, 2017. In 2017, we came very relevantly close, you can see right there, to that same level. And the market had that instinct to it. The market was more inclined to sell because that was the highest price point it's been since here. You can see how we went down for several weeks and we yet came back again. And what did we do? We had a very similar reaction to the first time and even slightly the second time, but sellers came into the market here, right? Referring back to this, we're at a level, we go down, we come back to it, sellers come in, we come back to it, and sellers come in. Now, I was sitting here 1 week. I was sitting right here 1 week when I was looking at this chart, and I said, you know what? What makes sense to me is that price is going to come here. I was looking at this chart, and I said, you know what? Price is most likely going to come right here. And what I'm going to do is when it comes there, I'm going to sell it. When I was looking at this at the time and point, it made sense to me that price was going to go there and that I was going to sell it there. That was my plan. Now, I want you guys to write this down and take note of it. I want you guys to install it in your head right now because as we get more in depth, you're going to hear me say it again. Support and resistance levels work like magnets. Write that down right now and remember that. I'm not going to get into it right now, but remember that. Some of you might not be at the level yet to understand that, as that's going to be a little bit more in the advanced trainings. Support and resistance, I'll give you a brief concept of it right now, works like magnets. I knew price was going to go here. I knew price was going to go to almost as if it wanted to go there. And I knew what I was going to do when it went there. Here's the next shot after. Here's what happened 4 weeks after. This was me then. 4 weeks later, this is what happened. The market came up, and what happened? The same thing that happened here, and way back over here. Why? Because this was what was considered high at the time. This was where we were selling the market. This was where big sellers were selling the market. So when I talked about a little bit at the beginning about how trading can involve anticipation, this was something I anticipated. I anticipated market to go here, and what I wanted to do when it went there was sell it. I already had the anticipation and the idea of what I was going to do. Now, support and resistance, it's not a holy grail. It's not a godlike system that's just going to make you generate tons of profits on a daily basis or weekly basis. It's a nature to the markets. It's what the markets do. And it's something that if you can really learn, you can be very, very accurate in the market. One more thing I want to talk about with support and resistance. One last thing I want to introduce to you guys is all-time highs and all-time lows. Say that with me, all-time highs, all-time lows. Say it a couple times because that terminology might be new to some of you guys. All-time highs, we're looking at all-time highs on this chart right here. Right? So support resistance always isn't going to just be one specific straight line or price level forever. It can often form zones of price, an area on the chart. Now, all-time high or all-time low price levels can be a great contribution with support and resistance as the demand increases around these types of levels for buyers and sellers. Look at this chart, for instance. When I see this chart here, kind of since 2008 till now, I can see what's high on the chart. I can see what is high all time on the chart, right? Like, if I look just at this general area where I'm circling, this is the highest it's been. That has a perceived value, right? You have to think of that. That has a perceived value in price. So one thing we're going to go over on our technical analysis training is breaking the charts down from the highest points and lowest points and kind of going towards the middle. You guys will see that in the next video on part 3. Here's another example of kind of all-time high, all-time lows. So this is an example on a chart, and we're viewing a long period of time here. If you look back down at the bottom left, you can see 2002 here. Look at the dates and look how far the dates go on this chart. You can see 2002, 2003, 2004, up to 2009. You can see here we're looking at a huge point on the chart. So all-time lows and all-time highs are the highest and lowest points a price has been on an asset like this chart. We can see in 2002, 2003, there was a low point here that the market formed. And you can even see here a relevantly lower point here and here and here. A few very low points that are very close in conjunction with each other. Right? They're very, very close. This one's very close to this one. This is the low ground that I look at. I look at it as if this came down to here, anywhere around here, what's going to happen long term? It's going to go up. People are going to want to buy it down there because that's low. Now, look at this chart. Same chart. Look at it now. Chart number 1, same chart, same chart. I didn't do anything different but add a zone here. I added a layer here to kind of give you guys that little clarity and a little bit more vision here. See what happens on this whole area, right? This is the all-time low zone of price. This is kind of the last term I kind of want to introduce to you guys here in this part 2 video of support and resistance. By now, you should understand what support and resistance is. Get a little bit of things to put into perspective as well. This is your all-time low zone, though. If you compare it to this, it's much more clear. It's the lowest price has been. So if the market were to come shoot down here, we could look for buys here. Easy to say. So it makes sense to see a type of reaction you do around these levels because these are where the big guys come in. Where traders, funds, firms, banks, institutions, governments, this is where they're buying low. This is what's cheap. Right? If you look at what's high on this chart, you can kind of see what's high. Over here, this is a high area on the chart. Way up here, that's a high area on the chart. All right? So I'm going to wrap this video, guys, up. Stay tuned for part 3. That's where we're going to dig into some technical analysis on the charts. I will see you guys there.